Hey, this is Justin from nextbigtrade.com. Tonight I want to cover gold and gold stocks, where we're still looking for an elusive bottom to this bear market that's been going on for a few years. Just to give a recap on gold, back in 2011, after an 11-year bull market run, gold made a major top, and everybody loved gold back in the fall 2011. Then it uh, went into a stage 3 topping process all throughout 2012. And it finally pierced the 30-week moving average in early 2013 into a stage 4 decline, all the way into mid 2013. And then from there, gold made a bottom, retested this bottom in late 2013, and then really has been in a basing phase ever since. And the key points on this chart to look at and to understand are a few different bottoms that gold's made over the past year and a half. That's the summer 2013 bottom, the late 2013 bottom, summer 2014 bottom, and then the November 2014 bottom. And why those points are important is because if you look at gold stocks and gold price in foreign currencies, you see those markets behaving differently at these points than gold. So you can see that structurally this entire market is making a turn over the past year and a half into a much stronger market underneath the covers. So in reality, those people that are looking for $800 gold or much lower gold prices, I think, are sorely mistaken. And I'm going to go into those points next. If you look at gold in foreign currencies, which is charting GLD versus UDN on the denominator, uh, if you think about those points I was just talking about, this ratio made a major low in 2013, then a final low in late 2013. But if you look at how it behaved in 2014, it started setting up a nice stage 1 base and then broke out into a stage 2 advance as soon as the dollar went on that parabolic run, which really crushed gold in US dollar terms. In foreign currency terms, gold has actually broken out into a stage 2 advance here, and this has held up for multiple months, which is really important because most stage or penetrations of the 30-week moving average that fail only last a couple weeks, whereas this thrust through the 30-week moving average has held up for weeks to months now. So this is probably a real breakout that's going to last, and this is very important for the gold market because gold essentially is breaking out into a new bull market in foreign currencies. It's just still in a late stage bear market in terms of the US dollar. Now, switching over to GDX. GDX, of course, is a ETF basket of gold mining stocks, and most of these stocks are priced in US dollars. So you see this market behaving more like gold, where it made a bottom in mid 2013, another bottom in late 2013, and then when the dollar went parabolic, it got smashed to a low in November 2014. The key point to think about on this chart, though, is that even though the dollar has gone parabolic since then up until now, GDX has held up extremely well. It hasn't made a new low since November 2014. Plus, the volume on GDX was off the charts back in 2014 when it made this important bottom. So chances are, because for reasons I outlined in another video, I think the US dollar is in serious trouble where it's at. Most people are bullish on the dollar and expect higher gains at a bubble top, but I think the dollar is in a late bull market that's in danger of topping, and GDX is acting just like that is probably the case because it's not making new lows and it's holding up in the face of a very strong US dollar. Another thing to realize about the gold market is if you look at a gold stock like Detour Gold, which is a Canadian gold stock, and if actually gold stocks in Canada are holding up a lot better in many cases than gold stocks that are traded on the U.S. exchanges, which makes sense because gold priced in Canadian dollars is doing way better than gold priced in U.S. dollars. So if you look at this chart of Detour Gold, you see the same type of setup where it makes this 2013 bottom, a late 2013 bottom here, and then it made another low in November 2014, but it's already gone back above its 30-week moving average, and it's really sitting up in a nice tight consolidation where it could break higher any time now. And if you notice the volume here, I mean the volume on the surge back above the 30-week was significant in early 2014 and again here when it made this bottom. So this is displaying characteristics of a stock that wants to break out into a new bull run. It's just waiting on kind of confirmation for the rest of the gold market. Here's a extremely strong gold mining stock. It's a royalty play. It's Franco-Nevada, and this stock is another stock that really, I think, explains to me why gold doesn't have a chance, in my opinion, of going down much below where it's at now. And the reason is because this stock is displaying leadership underneath the covers in a market that's still kind of in a late stage bear market. And what I mean by that is, when gold made that significant bottom in the summer of 2013, Franco-Nevada went on to make higher lows at each next significant bottom in the gold market. As gold continued to trend down, Franco was bucking that trend and actually going up higher. And this is just an example of leadership in the sector and of why, underneath the covers, the gold market is getting a lot stronger than people realize. So, if gold was really going to plunge a couple $100 more from here, you would see this stock, it wouldn't even be up here. It would be trending down here, probably like testing its lows in 2013 or breaking them. There's no reason it would be way up, at a high point in 2015 where it could already trade up to a new all-time high. So, and look at how strong Franco-Nevada has held up while the dollar has been so strong. I mean, ever since mid 2014 until now, I mean, this stock is really just, you can see the volatility. I mean, it's had to deal with a lot of strength in the U.S. dollar and a little bit of weakness in gold, but it's held up fantastic, and it's really just waiting for the dollar to top and for gold to finally make that major bottom. Richmont Mines is another interesting example. I mean, look at these bottoms again. I mean, gold makes a bottom in late 13, another bottom in the summer of 2014, but Richmont Mines all of a sudden starts taking huge volume and breaking out into a stage 2 advance. I mean, this is really a textbook stage 2 breakout where you have a huge increase in volume and the stock starts trading above its 30-week moving average. So Richmont's showing leadership in the gold sector as well, and I just don't think you would see examples of stocks trading this way if gold was in jeopardy of making significant new lows. One final gold stock to look at is Newmont Mining. Newmont, made a low in late 13 like other gold stocks. Then it got hammered down when the dollar went crazy here. But like other gold stocks that are on the weaker side, it's still holding this November low. And Newmont's actually displaying some significant strength here because you see on this huge increase in volume down here and advance back above to the 30-week moving average. And it's still holding that 30-week moving average in a very bullish chart formation here that really could be like an inverse head and shoulders where you have a shoulder here, the head, and another shoulder forming here. And for that to break out into a new stage 2 advance would be just ideal here based off this chart pattern. So Newmont's acting very bullishly as well, which is extremely bullish for the gold mining sector. And just to go back and look at stage analysis really quick, what we're really looking for here is an end to this basing phase in gold and a breakout on strong volume into a new stage 2 bull market. And if we go back and look at the chart of gold, we're starting to see a little bit of volume down here, late in 2014, but we're just not, back above that 30-week moving average yet, and we're still kind of just like, just trending lower, but really not going significantly lower. And gold has really held that summer 2013 bottom extremely well, even though, I mean, think about how bearish people have remained on gold all during this time, yet gold is trading at the same level it was back in mid 2013. To me, that's extremely bullish, and it's just part of a basing phase where people just get fed up and don't even care about gold anymore. But in reality, it's setting up a strong base, which is going to provide the impetus for the next bull market move in gold. Thank you, and I hope you have a good night.